$119.6 million. That is how much money institutional investors poured into XRP last week. $119 million in a single week. Into XRP specifically. Not into Bitcoin, not into Ethereum, into XRP. While you were watching the price sit at $1.29, while the Fear and Greed Index was reading 9, while the XRP community was posting doom threads on X about the Clarity Act deadline and the short squeeze, while mainstream financial media was writing articles about XRP going to $1, institutional money managers were quietly buying $119 million of XRP. This is not an estimate. This is not a rumor. This is official data from CoinShares, one of the most respected institutional crypto analytics firms in the world, published in their weekly fund flow report for the week ending April 3, 2026. $119.6 million. The largest single week of XRP institutional inflows since mid-December 2025. And XRP accounted for more than 53% of the entire global crypto fund rebound of $224 million. More than half. XRP beat Bitcoin. XRP beat Ethereum. XRP beat Solana. XRP was the #1 choice of institutional money managers globally last week. And here's the part of the story that nobody is talking about. The part that changes everything about what you think you understand about who is buying XRP and why. Almost none of this $119 million came from America. Almost all of it came from Europe. Switzerland alone brought in $157 million of total crypto fund inflows last week. More than any other country. More than the United States by a factor of nearly 6 to 1. I'm going to explain exactly what this means. Why European institutions are buying XRP at $1.29, while American retail investors are panicking. What they know that is driving this decision, and what it means for every XRP holder watching this video right now. Stay with me. This is the hidden story behind last week's XRP data that will change how you see the current market. Step 1. Let me show you exactly what the CoinShares data reveals. CoinShares is a publicly traded digital asset management firm based in the Channel Islands. It manages billions in institutional crypto assets, and every week it publishes a detailed report on global crypto fund flows, money flowing in and out of institutional crypto investment products worldwide. Their report for the week ending April 3, 2026 revealed something extraordinary. Global crypto investment products received $224 million in net inflows, after a brutal week the previous week that saw $414 million flow out. But here is the breakdown that matters. Of that $224 million total, XRP funds received $119.6 million. Bitcoin funds received $107.3 million. Solana funds received $34.9 million. Ethereum funds lost $52.8 million. XRP beat Bitcoin by $12 million. In a week when Bitcoin was recovering from lows and getting the most mainstream financial media coverage, and XRP's share of total inflows was 53%. More than half of all institutional money that went into crypto last week went specifically into XRP. The year-to-date XRP institutional inflow now stands at $159 million. That represents approximately 7% of XRP's total assets under management. 7% of assets under management flowing in through institutional products in a single quarter, while the price was down 30%, is extraordinary structural demand. This is not retail investors panic buying a dip. This is institutional allocation. Planned, deliberate, executed through regulated investment products. Step 2. The geographic story that makes this data even more alarming. Here is the part of the CoinShares report that your average XRP YouTube video is not explaining. And it is the most important part. Of the $224 million in global crypto fund inflows, $157 million came from Switzerland. 70% of the global total came from one country. Switzerland, the United States. the world's largest crypto market by most measures, contributed only $27.5 million. Switzerland contributed nearly 6 times more than America did last week. And importantly, so value data shows that the 5 US-listed XRP spot ETFs, run by Canary Capital, Bitwise, Franklin Templeton, 21Shares, and Grayscale, saw near zero daily flows throughout the past 2 weeks. Total assets across those products sit at approximately $940 million. But the $120 million that flowed into XRP globally did not come from those products. It came from European and international exchange-traded products, mainly through Swiss and German institutional channels. What does this tell you? It tells you that the most sophisticated institutional capital in the world, concentrated in the private banking capital of Europe, decided last week at XRP's lowest price of 2026 that this was the moment to add exposure. And they did it quietly, through channels that receive almost no media coverage in the XRP community. While American retail investors were reading motley fool articles saying XRP might go to $1, Swiss private banks and European institutional funds were buying $120 million of XRP. Step 3. What these European institutions see that American retail is missing. Let me tell you exactly what is driving this European institutional allocation. Because it is not random, there is a specific thesis that sophisticated money managers have identified. The Clarity Act binary event. CoinShares analyst James Butterfill noted specifically that the XRP surge in European inflows reflects positioning ahead of the Clarity Act late April Senate Banking Committee markup. European institutional fund managers have read the same Senator Moreno warning I covered in my last video. They understand the binary outcome. Clarity Act passes in April and XRP gets permanent federal legal clarity in America. Clarity Act fails and it is dead until after midterm elections. European fund managers are making a calculated bet. They are saying that at $1.29, with the Clarity Act markup potentially 3 weeks away, the risk-reward of XRP is extraordinarily favorable. If the bill passes, they participate in the institutional allocation wave from U.S. funds that follows. If the bill stalls, they lose some money on a temporary bet that they can absorb. This is what asymmetric positioning looks like from the inside of a fund manager's office. They are not buying because XRP's price chart looks good. The chart was terrible. They are buying because the regulatory catalyst is approaching, because supply is compressed, because U.S. institutional allocation intent is high, and because the price at $1.29 represents a specific entry point that sophisticated models have identified as favorable risk-reward relative to the binary outcome. This is the hidden truth about last week's data. The panic you felt watching XRP at $1.29 was not shared by institutional money managers in Zurich and Geneva. They were clicking buy. Step 4. Why XRP beat Bitcoin by more than the actual dollar amount suggests. Let me give you some additional context that makes XRP's institutional performance even more striking. When you compare XRP fund inflows to Bitcoin fund inflows, the headline numbers show XRP at 120 million and Bitcoin at 107 million. XRP ahead by 12 million. Impressive but not shocking on its own. But here's the context. Bitcoin's total assets under management across global funds is many times larger than XRP's. Bitcoin ETFs globally hold hundreds of billions. XRP ETFs hold less than 1 billion. When you normalize the inflows as a percentage of assets under management, XRP's 7% inflow rate for the quarter is dramatically higher than Bitcoin's comparable rate. XRP is attracting institutional capital at a faster proportional rate than Bitcoin right now. And the geographic concentration in Switzerland is significant for a specific reason. Swiss institutional capital is known for its patience. Swiss private banks are not momentum traders. They are not chasing headlines. When Swiss institutional capital allocates to an asset, it tends to hold for months to years. The $120 million that went into XRP through European products last week is not hot money looking for a quick trade. It is patient capital taking a position ahead of a catalyst. Ethereum, meanwhile, suffered $52.8 million in outflows. The same week, XRP pulled in $120 million. That divergence between XRP gaining and Ethereum losing in the same week during the same market conditions tells you something specific about institutional conviction between the two assets. Step 5. What happens next as U.S. institutions catch up to European positioning? Here is the final piece of this story, and it is potentially the most important for your portfolio. The U.S. XRP ETFs, the 5 products from Canary, Bitwise, Franklin, 21 Shares, and Grayscale, saw near zero inflows during the same week that European products were pulling in $120 million. U.S. institutional participation was essentially absent. Why? Because U.S. institutional allocators are waiting for the Clarity Act, the specific regulatory clarity that gives U.S. fiduciaries legal permission to include XRP in client portfolios without liability risk. European funds operate under different regulatory frameworks. They can allocate to XRP without waiting for U.S. legislation. When the Clarity Act passes, the U.S. institutional wave follows immediately, and that wave is significantly larger than the European wave. U.S. financial markets dwarf European financial markets. The $120 million from Europe last week is a preview of what happens when U.S. institutional capital gets permission to allocate. Analysts project $4 to $8 billion in new U.S. XRP ETF inflows when the Clarity Act passes. That is 40 to 60 times larger than last week's European inflow. Into a market where supply is compressed, into products where U.S. institutional allocators have been publicly planning additions since January. The Europeans got in at $1.29. The Americans will follow at whatever price the Clarity Act passage creates, and the Americans are bringing significantly larger capital. Step 6. What this means for every XRP holder right now. Let me give you the direct, honest conclusion. Last week when XRP was at $1.29 and the Fear and Greed Index was at 9, institutional money managers in Switzerland spent $120 million buying XRP. That is the most important data point from the last 7 days in the XRP market. They were not buying based on price action. They were buying based on the same Clarity Act binary event thesis your channel has been covering for weeks. They were buying ahead of the U.S. institutional wave that follows passage. They were buying supply that was compressed to historic lows, and they were buying at prices that sophisticated models identified as attractive entry points. If you are holding XRP right now and you felt alone during the fear, you were not alone. You were in the same position as Swiss and German fund managers who were allocating $120 million into the same asset at the same time if you sold into the fear at $1.29. This data explains what the other side of your trade looked like, and if you are watching the Clarity Act markup timeline for late April, European institutional money managers are watching the exact same calendar. The capital is positioned, the legislation is approaching, the supply is compressed. What happens when the match hits the powder is something everyone who understands this data can model. What happens if there is no match is something everyone should also honestly assess. April 13th is Sunday. The Senate returns Monday. Watch that week closely. Now I want to hear from you. Did you know that European institutions bought $120 million of XRP last week while American retail investors were panicking? Type new if you were already tracking institutional fund flows. Type shocked if this was completely new information. And type buying if this institutional data makes you more confident in your XRP position. Going into the Clarity Act window. Drop your answer in the comments right now. I reply to every single comment in the first hour this video goes live. Subscribe and turn on the notification bell immediately. When the Senate Banking Committee announces its Clarity Act markup date next week, I am posting within hours. The European institutions are positioned. U.S. institutions are watching the same date. Subscribe now so you do not miss the moment everything changes. Thank you for watching. I will see you when the Senate returns. And I will see you in the next one.